A harsh jobs report led to former President Donald Trump criticizing the chair of the Federal Reserve, Jerome Powell, once again on Wednesday. This came just after Trump had praised the United States for having its best May in 30 years. The analysis from automatic data processing found that the United States private sector added only 37,000 jobs in April, marking the lowest number in 2 years. In response, Trump took to Truth Social and urged Powell to cut interest rates once again. He expressed his frustration comparing the situation to Europe, which he claimed had lowered rates multiple times. The jobs report from automatic data processing was released 2 days ahead of the official numbers from the Federal Bureau of Labor Statistics. These numbers are expected to be higher due to differing calculation methods and are more closely monitored by traders. Despite his earlier boast about the economy, Trump's quick response to the report highlights his ongoing frustrations with Powell. The White House had previously reassured reporters and economists that Trump was not considering firing Powell earlier in the year after being dissuaded by 2 cabinet officials. In April, Trump had called Powell a major loser and blamed him for not cutting interest rates sufficiently. Powell, in early May, stated that while the economy's foundations were solid, risks of higher unemployment and inflation had increased. He linked these risks to the tariffs imposed by Trump on all United States imports and higher tariffs on many trading partners. Powell mentioned that it was unclear what action should be taken, noting that the tariffs could lead to inflation, slower economic growth, and increased unemployment. For the time being, he suggested waiting for greater clarity before making any policy adjustments. These statements angered Trump, who, along with White House and cabinet officials, has opposed analyses predicting that new trade barriers would slow economic growth. Major retailers like Amazon have expressed concerns about price hikes due to tariffs. Additionally, Trump faced news of the United States dollar slipping to its lowest value in 3 years. He argued that preemptive cuts in interest rates were necessary, citing lower energy costs and food prices as evidence of no inflation. He criticized Powell for not lowering rates and accused him of acting too late. As markets reacted with concern to the tariffs, Trump backed off on some challenges. He announced that the United Kingdom would be spared a planned 50% tariff on steel and aluminum imports. Similarly, he delayed plans for 50% tariffs on European Union imports after discussions with Ursula von der Leyen, President of the European Commission.